Well, after a surprise profit warning, Brady has secured 3 new contracts. Now, you may remember that Brady is a supplier of trading and risk management solutions for metals, recycling, energy and soft commodities. Well, let's have a look at the contracts they've just won. 2 top-tier global Japanese-owned trading companies have selected Brady Cloud Solutions to support their trading and risk management requirements, and a European firm focused on delivering clean energy to large industrial and commercial consumers has selected Brady's energy trading and risk management solution to manage its renewable energy trading, position risk and back office operations. Well, no financial details have been provided, but what we have been provided with is the Chief Executive, Gavin Lavelle. So we don't know how much these deals are worth, Gavin, but are they significant and are they likely to be of a recurring nature?
Well, Sarah, first of all, the transactions themselves, very good to get new deals across the line. Q4, I think, as we've discussed before, is always very busy from a contracting perspective. We never disclose the size of contracts in the marketplace. We have to respect our customers' confidentiality. But suffice to say, these are very good deals and meaningful from a financial perspective. And furthermore, I think from demonstration that we can still execute really good business in what's frankly been a very challenging time in the commodity space. I think everybody will have seen headlines that commodity markets have been volatile. It's challenging times for a number of our customers. So we've still been able to execute significant deals. As you say, 2 top-tier Japanese names are always good to do business. Those were 2 cloud deals in the metal space. And I think very interestingly, 75% of the new contracts that we've signed this year have now been cloud deployed. This is a seismic change in the industry. People are much more receptive to taking the Brady cloud offering. So I'm very, very excited about that. And over and above, we signed a clean energy deal in Germany. Germany's a new market that's opening up for us, and it's a customer who sources power from renewable sources, wind farms, solar farms, and provides that as a clean energy product to their end clients. So, really good names, good business, and very, very good to add them to our client portfolio.
Okay, well, I'm glad you referenced the challenging times, because last time we spoke, you said deals have been pushed into 2016 as existing and potential clients reposition themselves in line with the commodity markets. Do your clients still view your products as value enhancing and critical to their operations?
Yes, very much so. We operate in the trading and risk management side, and whilst there have been some deferrals in contracts. Things have moved into 2016, as I explained last time we spoke. But having said that, I think the ability to sign this new business in Q4 is just testimony to the strength of our software. We allow our clients to manage their risk effectively, and also deal with the operational credit counterparty risk for their business. So these are very important mission-critical deals for our customers, and we're very happy to provide that support for them.
Okay, we also talked about how long it took to convert your pipeline into actual sales. Now, hindsight is a wonderful thing, but if you had signed these deals just 3 weeks ago, would you still have issued the profit warning?
We're not changing the outlook for the year overall. So these deals are consistent with what we have said, and looking forward, there's still other deals that have moved into 2016, which we will expect to sign in the new year. And so this is as we forecast last time we spoke, and but it's always very important to get the signatures and to secure the contracts.
Well, cash is also king. You have about £4 million in the bank. But what about the cash burn? How long will that cash last for?
Because we contract a lot of software in Q4, very typically our cash balance increases as we secure new deals, sign more business, collect our service and maintenance, and people generally true up their outstandings at the end of the year. So our cash balance always rises between November, December, January. This will be no different, and we've got a forecast in the market. There is a forecast in the market of £5 million worth of cash. We have trimmed our cost base to ensure that we're profitable going into next year. So there is absolutely no concern over the balance sheet. We have no debt. And in fact, in our industry, we're the only major supplier in this space without a highly leveraged balance sheet. And I think the fact we have no debt puts us in very good condition coming into 2016 and beyond.
I'm quite sure that the leveraging and the leverage position was one consideration when Kestrel Investments increased its stake in you to around about 18%. Your market capitalisation is now £40 million. Do you consider the business to be undervalued?
It's great to see our largest shareholder supporting us and adding to their position, validating our strategy. So I very much appreciate that. We are clearly operating in a very important market, and in challenging times, Brady is taking increased market share. And at the same time, by not having a leveraged balance sheet, I think we are going from strength to strength. So I think that's just validation of what we're doing and confidence from the investors who've known us for many years and work with us very closely on the strategy for the business. So, great to see that support. Okay,
so you're taking more market share, but you've got to maintain this. So what about the innovations and platforms we can look forward to in 2016?
Yes, so the commodity markets are cyclical. We are seeing uncompetitive production areas being shut down or go out of business. Over time, that will lead to people reducing their inventories of commodities, and commodity prices, will bounce back, and we'll see, further uptick in prices at some point. So I think this is not untypical for the commodity markets. My job's not to call the turn in the market. I see my customers being cautious and prudent as we speak, and where we're helping our clients is by offering cloud-based risk management software. We're able to deliver risk tools so they can effectively manage their exposures. And as we deliver via the cloud, we can do that in what is for our customers a very cost-effective fashion, but for us increases our recurring revenues. So one of the main things that we're doing is helping our customers reduce their overall spend, but increase it with Brady. And I think this is a clearly successful strategy in today's environment.
Gavin Lavelle, Chief Executive of Brady, thank you very much indeed for joining us today.
Sarah, thanks for your time.